Okay, good morning, everybody. Happy Monday. It's the last day of February, February 28th of 2022, and we're going to do our Monday morning analysis here. Go ahead and kind of scrutinize those higher time frames, see what has changed over the last week, and then we'll start getting into some actionable levels for this morning. So let's go ahead and take a look here. I'm going to go all the way up to my 3-month chart here. This candle is going to close at the end of today, so we're going to have to come back and take a look when it actually closes, but looks like we have a pretty nice bearish divergence off the all-time high from the 3-month perspective here. And looking at the larger retracement scheme, remember this down here is all the way from the COVID correction back in March, April of 2020, and the all-time high all the way up here at 48.08. 37.77, give or take a few there, is right around the 38% retracement. 50% would be all the way down to this 34.50 area. And that's not out of the realm of possibility here. So currently we're sitting, let's just say somewhere around 43.20. So, it's not out of the realm of possibility. We could be another 1,000 points down and still be holding 50% of this whole push since the COVID, correction. So we'll have to watch that. Outside of that, up here on the quarterly, not much else to say. So that's all we got up there. Just the idea is, even if we do pull back 500, 1,000 more points, we're not out of the weeds for the bulls. We're still in a bullish market here. So let's go ahead and jump down to our monthly. The one thing that sticks out to me on the monthly here is that we have some major wicks to the downside. And this, remember, this is the February candle. It will close at the end of today. And I'm just noticing, let me see if I can highlight this here. Whenever we get these gigantic wicks on the lower end of the candle, pretty much every time here on the monthly chart, it ends up leading to a continuation for the bulls. So I don't want to ignore the fact that we do have two candles that look very much like a lot of these candles in the past. In fact, any time we have a wick that's equal to about 50% of the candle, it typically just goes ahead and continues to carry forward here. Of course, in some situations, you get something like right here. I don't know if you guys can see this down at the bottom left. And then it goes a little sideways, and even peaks below, but then goes ahead and continues to chug higher. So that's the one thing I'm kind of noticing on the monthly here, is that both of those candles, if this candle closes the way it looks today, and we get a new candle open here, it looks very similar to some of those other reversals. What else can I say up here? We're going to have to wait for this candle to close, but if it closes the way it looks right now, again, at the end of the day, there's not necessarily a strong bullish divergence or anything from the lows, but those candles to me kind of look like a lot of these previous corrections. So just that's all I really have up here. Don't think there's really much else to add to the picture outside of the fact that we've had the bearish clues ever since November of last year. So we've been watching on the higher time frames here, including back on that quarterly chart, and on our weekly down below the monthly here. We've been watching ever since November. We've been expecting a much larger time frame pullback. So there you can see it back from November 2021. There was December, and then January is when the whole thing fell out. When we came up and retested that high at 08 and got the failure. On our weekly here, remember back when we looked at this candle a few weeks back, that was our clue that we might have found a bottom and we were going to bounce out. The bulls attempted to, and then again, that's that 45.70 to 45.80 region that we expected could be trouble. They failed from there. And looking at the previous weekly candle here that closed on Friday of last week, that to me also looks like a potential reversal candle, right? Just like this one here. And again, going back in the past, almost like the monthly chart, almost every time we have these type of wicks to the downside, we see continuation to the bullish end. There's very rare instances where we get a major reversal candle like that and the market continues to sell off. Every once in a while you'll see it. There's the COVID correction. If we just kind of scroll back and pretend we can't see the right hand side there, that looked like a nice major reversal bar there, but it continued going. I think this is somewhat of an outlier, but we are in a large correction right now, so who knows? But I do think that those look kind of interesting there. So watching that low of the wick, the low of last week there at 4101.75 is going to be important to hold there. Outside of that, we do have the argument for a bullish divergence off this low. I'm not in love with the kind of signal it is, but it is there. So I'm going to throw a bullish divergence down there. Going back to all these previous lows, you can see how extended the RVI has gotten here. And I don't spend a lot of time talking about the actual RVI levels, but if we go back to the quarterly here, you can see we're still in major bullish territory. This quarterly chart has never been below 70 on the RVI here, which is insane. And then on the monthly here, as you can see, we're not even below basically 80. I mean, this is insanely bullish territory from the range rules of RSI or RVI. And then on the weekly here as well, you can see the last time we were this low on the chart was during the COVID correction, and back, I believe was the correction back in 2018 at the end, going into October. So those are the only two times we've been down this low. And then you can see there's eventually the bulls jump in and continue here. So unless we're going into some type of protracted bearish market for a number of years, this is probably going to end up finding some strength eventually for the continuation. So this is what we're seeing up in our higher time frames. Of course, all three of them are showing the very clear confluence of bearish signals from the highs. The question's going to be, how far are we going to correct here? And I would say that we get our first clue for the bulls when we get down to our weekly chart here. So it's kind of like we had a couple, actually back to 4 or 5 weeks ago. Everything looks really bearish, but when we get to the weekly, we get our first bullish clue off the low of last week. And then our daily still has the bullish divergence at that same low that we saw on the weekly. And we talked about this a few days ago when we were down here on the 24th of February. I don't remember exactly what day of the week that was. We said we've got a nice clear bullish daily divergence. We need some confluence with other time frames, but that could lead to some type of major push higher, just because every time we have a daily signal, it typically can lead to a very strong push. So this is what ended up happening. We've got this push up to just around 43.8750, or what's the high? 43.84, and now we're finding some trouble. What I want to do really quickly here is just take a look at this retracement here and just see where we're finding trouble, and it happens to be just about at that 61.8 area. So that's what we got here on the daily, a nice bullish divergence from just 2 or 3 days ago, and there's an attempt by the bulls now to push out, but looks like some trouble. I don't see a strong bearish signal off the high that we made from last week, so not necessarily expecting a major sell-off from that high, but anything's possible, right? So that's where we're at right now, currently trading within Friday's price action. So it's going to be important to get out of there. I was over at the Traders Expo over the weekend, and there's this one S&P trader, and he argued that 82% of the time on the major NQ S&P markets, the market will trade within the previous daily range 82% of the time. Now, I don't know how reliable that's going to be, because when the market starts to change, then that statistic is going to change. But we could end up trading within here this morning, especially after all of the huge moves that we've had in the market. So let's get down now into intraday time frames and see what levels we want to pay attention to coming into the open here. I just want to point out, if we can go down, I don't know if it's on the 60 here. So down on the 60, I believe on Friday, we were looking at, I mapped out the market for everyone before I left to go to the Traders Expo on Friday morning. And one of the main levels I marked on the chart was this major swing low here at 81.75, and we threw up this dotted line. What ended up happening was the high of the day was essentially 81.75. It came up just a few ticks in front of that, I think a point and a half in front, pulled back, and then closed just about 2 or 3 points above it. So the high of Friday was the very level that I specifically pointed out was going to be really important. So let's see what we can find coming into this morning. From the 60-minute perspective, first thing I want to point out is we've got a giant gap from the close of Friday to the Globex open. We fell from just about 43.80.50 all the way down to the open of the Globex session around 4,300, give or take a few ticks. So we've got a pretty nice gap here, about, what is that, about 80 points. And in the overnight session, they did hold 42.62 here and go ahead and try to go ahead and bridge that gap there. And then note, it's kind of interesting to note here that the market held 62, the major eye level, pushed up and pushed right to 24.50 eye level, pulled back and held 50% of that previous day of Friday's price action, and is now attempting to continue to go. And you can see the market pull back in the overnight here, held the 50% of the previous day once again, and is attempting to bounce out. One other thing I noticed yesterday going into Globex, we actually came right up to 50% of the previous day and failed and pulled back for a pretty appreciable pullback there. Definitely, so yeah, I mean, we're talking at least a 25-point pullback from it there. And so here we are. You can see we're attempting to bounce and hold 50% of Friday's price action and come up. There is somewhat of a bearish looking candle here off the overnight high. And it happens to be right at that failure point right in here between 43, let's say 45 and 43.60. So again, I don't have a strong indication that we can expect some type of bullish continuation, but right now we are holding 50% of the previous day, and this on this new candle, it looks like we're attempting to come back up and get through that overnight high. So let's see what we have above us and what we have below us here this morning to be aware of. If we're going to be in any trades, if you're long, you're probably going to want to take profit in front of some of these important levels above us. And if you're short, you're probably going to want to take profit in some of these levels we have below us. So let's take a look at what we have. I'm going to get rid of this shaded area that I think I marked back on Friday. It looks like they just kind of chugged through it and held the top end. So I'm going to get rid of that. And this morning, the 80.50 level up top, that's the expectation. A lot of times when you have a gap in the market will go ahead and retrace and fill that gap. So there's an expectation probably from a lot of retail traders that we're going to get this push to come up and fill that gap up to 80.50. So just be aware of that level up there. And again, we marked 81.75 last week as an important level, and it's again interesting that we came right to it and got this gap down. So let's see what we have. Just going to pull back and see what price structures we have above us. Essentially, the eye levels are marking all the most important levels here, but I just want to take a look and see what the deal is here. From the larger perspective, the 61.8 brings us all the way back up to 4,400 here. And because 4,400 happens to be a nice round number, we have an eye level demarcating a major level of structure, and the 61.8 is all sitting there. To me, that's going to be an interesting level here if they end up pushing higher. So if they can get through Friday's high and the gap itself, I think that 4,400 to 4,398 level is going to be interesting. If they end up getting through there, if the bulls can push through there, we still have the other dotted line I put on here and that 15 area that's been shaded for a while now. So there's, let me get the actual number, somewhere around 44.10 to, I guess, let's call it that swing low at 44.20. So again, a little 10-point range in here. There's a major swing low back here at 22.75 that I marked last week. In fact, you guys should remember that level if you were here. That 22.75 down to 44.15 is what we marked last week. I'm just noticing that swing high I mentioned over here as well. So we've got a little bit of a range, but that little section right there looks interesting. And then a little bit deeper, we still have this level that really hasn't been tested that we identified last week here, just around 44.40 to 44.45. That's the most immediate region here. If they continue to push, there are going to be some more important levels up above as well. In fact, there is the larger retracement itself. So let's go back here, and I think that's it right there. Yeah, so the larger retracement itself, that 61.8 is up. Oh, that's that 4,400. If we look at the entire sell-off from 48.08 all the way down, 50% of the whole leg is going to bring us all the way up to that 44.50 area. So yeah, that's that level we marked. So that's good. So I think that's a good enough thing for above us. And then below us here, we need to look at if the market cannot hold 50% of the previous day and our orange line here at 0375, we have to look at what we have below us here as potential support for a sell-off. And we basically have the same things that we were talking about on Friday morning. So I don't really have any work to do here because I already did it last week. We have this area right around 42.40 to just about the 50% level of the whole push from that double bottom back on the 24th. A little bit deeper brings us to the 61.8 retracement, which happens to line up with that 42.13 eye level. And I believe there was a structure over here on a shorter time frame that was sticking up that we wanted to pay attention to. So right in that area. And then a little bit deeper from there would bring us into the 89 and that major swing high there around 96. So we've got these general levels here. And then if it breaks through all that, there's that major swing high there at 41.64. Just like I pointed out the major swing low over here, I think that this major swing high down here could be interesting, could be a level that holds maybe even to the tick for some type of bullish support. So just watch that. And I think that's it. Let's go down to the intermediate time frames really quick and see if there's anything else we can eke out of the charts here. What I want to do really quickly is just point out that off of the overnight high, we do have a potential 4-hour bearish signal. So the 4-hour shows a little bit of potential bearishness off the overnight high. The 60-minute also shows some potential bearishness, some bearish divergence off the overnight high with a nice, what looks to me, a reversal candle from there. And then on the 30-minute, let's go down and see if we get agreement here. 30-minute as well, lots of bearish divergence off the overnight high. So we have a pretty good agreement for the bears off the overnight high. We just need to keep in mind that doesn't mean it has to sell off. It's just a good clue. And if it doesn't happen, remember, anything's possible. But I do think there's a pretty good argument for the bears off that high. So it's going to be important this morning for any type of faith in the bulls to get through the overnight high just as starters, just as a beginning. So just watch that. And let's take a look here on the 30-minute. Does anything else stick out to me? We've got this level here, basically the two prediction points. Let's see, 42.87 to 88. I just want to make sure I didn't already mark that. So that level to me looks really important here. If the market does pull back, we've got this really strong rejection level here, right where the two prediction points are lining up, right around 88 to 86, let's call it. That to me looks really interesting in the most local area if the market is to pull back. So that's what we're looking at coming into the open here. Don't think there's anything else I can really add to the picture. We've got a good argument for the bears off the overnight high, so not being able to get through there or peaking above and failing is going to be an argument to jump short into some of the levels we talked about below us. And that's where really all I have. The market is super heavy if you just zoom out and look at what's going on, it just continues to fail lower and lower. So don't get too married to the bullish side, but at the same time, don't get too married to the bearish side, because this market has been very two-sided. So we'll leave it at that. It's been a really wonky, tricky market. So don't get too aggressive with whatever you do. And I think that's all I have for Monday. Have a great day, guys. We're going to jump over to the members section. Take care.